Traders keep experiencing losses like this, and this due to the lack of understanding of what I'm going to show you guys in today's video. Now, in today's video, I'm going to show you guys the two mistakes that traders make while using candlestick in trading and the right way to trade using candlestick pattern, because most of us will use candlestick in the wrong way. So make sure you stay to the end of this video because you're going to get value of today's lesson. And subscribe and like and share this video. And let me switch over to my laptop and explain this guys for you guys in thorough details. This is GBP on the daily time frame, and I'm going to break down the two mistakes that traders make while using candlestick, and I'm going to give you the solution to trading candlestick properly in the market. Now, the first mistake traders make is when you're trading candlestick that's not in line with the overall market trend. When you're trading candlestick that's not in line with the overall market trend. Now, as you can see, this market here is currently on a down trend, so we should be selling this market. We should not look for buys on this market on GBP as we can see on the daily time frame here. Now, some traders, once they see this, they will be looking for some ways to force a buy in the market when there's no buy. They could go down to the lower time frame, let's say 15 minutes, for example. They will go to the time frame, let's say 15 minutes, and going to look for buying opportunities or using candlestick to trade when that's not in line with the market trade at that particular time. Now, let me give you guys an example of what I mean by that. Now, if you can see here, if you can see in this place here, the market pushed up. Now, some traders will say, oh, the market has changed direction here. We should be buying this market. The market has changed direction here. We are seeing higher highs, higher lows, higher highs, higher lows, higher highs. Now, we should be buying. Now, they will come here and maybe highlight a demand zone here or a support zone here, as some people call it. And they'll say, okay, let's wait for price to come back here and we buy. Now, if you see here, what happened here, it came here. I get me. It gave the first a reaction here. Let me show you guys. It gave a small reaction here on this particular zone here. This place. It gave a small push upward, but it couldn't sustain it. Then what happened? So now, if you came here and placed your entry on this particular place like this to buy, you put your entry here, and let's say you put your stop loss here. So let me catch a 1:3 trade here. What would have happened? Your stop loss would have been hit. Why? Now, if you look at the candlestick pattern here, especially, it does not show any bearish candlestick pattern, maybe like a hammer, a morning star, or whatever candlestick pattern you trade with. There's no confirmation here, and it's not in line with the market trend. So this is the mistake traders make when they are trading. You see, you just push to give a little reaction to show it, and if you look here, you can see the momentum of the candle is in favor of the bears rather than the bulls. So what happened? Your stop loss would have been hit and would have been taken out of the market, and you would have said, "Oh, trading is a scam; it does not work." But it's due to the lack of not understanding the market direction and using the right candlestick pattern to trade with it. Now, let me give you another example again. If you see here again, the same thing. If you see here again, okay, let me give you an example here. If you see if you look here again, now if you look here, this is a good demand zone for some people. You will see here again. You highlight here. Oh, let us buy here again. Market is going up again. Let's buy here again. Now what happened? If you look here, the market gave a very good reaction here. If you look, it pushed up, it came down, it pushed up again. Then if you see here, it gave us like a bullish confirmation. Now some people will say, okay, let's buy again. Let us buy this market again. Now you come here, you set your entry. Let's after seeing this candlestick pattern here, you say, oh, let me enter from here. Then you set your stop loss. Now if you look, it moved up to some point here. It gave about almost 1:1 arrow risk to reward ratio. Then what happened? Now you would have set your target. Okay, let me target here 1:3 here. Now what happened? It pushed up, then it came back, it took your stop loss out. It took you out of the market because why? You are not trading in line with the market trend on the higher time frame. You are not trading in line with the market trend on the higher time frame. Now what happened? Your stop loss has been what? Has been hit. You've been taken out of the market. Now, this is mistake number one. So make sure you stay to the end of this video. I'm going to show you the solution or the right way to trading using candlestick pattern in line with the market direction. Now what happened? Your stop loss would have been hit, would have been taken out of the market. It has been happening everywhere, almost everywhere on the chart when you are not trading in line with the market. You can see here again. You can see also here again. What happened? You say you want to buy from here. Let's say you want to buy from here. What happened? It gives a reaction. It gives you a reaction to to induce you to come into the market. You see, it pushed up. Look at, you see the wick. You say, oh, let's buy again. You come, you set your order, your buy limit order here. Then you set your stop loss. Oh, let me target this high here. What happened? Boom, it hits your stop loss because you are not trading in line with the market trend. Now, this is mistake number one. This is mistake number one. Now, let me show you guys again. This is mistake number one that traders make while trading in the market. This is mistake number one. Now, let me show you guys mistake number two. Let me show you guys the mistake number two traders make while trading on the market. The mistake number two traders make while trading in the market. Here's the okay. Now the second mistake is when your trading candlestick does not in a valid supply and demand zone. When your trading candlestick does not in a valid supply and demand zone. Now let me go down and break this down again. When your trading candlestick does not in line with the in a valid supply and demand zone or a valid support and resistance zone. Then put it that way for some people that use that pattern. Now, if you see here, we have this is the supply zone here, and this is the demand zone here. Now, suppose okay, we've seen price come here, we've seen price come here. Now, as we said before, this market is currently on a bearish trend. Now, this is a support zone or a demand zone. This is a support zone or a demand zone. Now, you come here and say, okay, this is a demand zone. And I say, okay, let me set my buy limit order. Let me buy this market up from here. You set your limit order. You set your order. Then it's okay, let me take this up. Oh, this is a good demand zone. It's a break of structure here. As you can see here, you say, okay, this is a break of structure here. Let me buy this market up. So let me buy this market up. Then what happened? Boom, it pushed up here. Then what happened? It comes back. If you're expecting this trade, let's say up to this point here, then what happens? It comes back, it hits your stop loss, it takes you out almost immediately. Almost immediately, it takes you out of the trade. Why? And if you look, there's no momentum to even push up because this is not a valid demand zone because it's not in line with the market trend at this particular time. That's why this demand zone is failing. That is why this demand zone is failing right now. Now, let's check another demand zone again. Now, if you look here also, we have another demand zone here. Let's say this demand zone, let's say when price was here. Now I want to buy again. I want to buy this market again here. Now you set your order. Then what happened? You put your stop loss here. What up? It takes you out again. You want to sell, you want to buy up here, it takes you out again with a loss. Now, this is how you keep repeating the market with losses until you blow your account because of lack of understanding of trading candlestick in line with the trend and also in a good valid supply and demand zone. Now, let me give you guys a solution to trading candlestick in the right and proper way on the market. Now, the first way I'm going to show you guys is now. Let me still use this chart. Now, as you can see here, the market here is currently on a bearish trend. As you can see here, there's a shift in structure showing that sellers are currently in charge of this market. So what you should be doing currently is to be what? Is to be selling. Since we've gotten the higher time frame, the market direction from the higher time frame, that this market is currently bearish. And this is the 1 hour time frame on GBP. So you should be looking for opportunity for sales. Now you can highlight this zone here. This is a supply zone here. This is supply zone here. Let's you highlight this zone and you wait for price to come back up here. Now, when price tapped into this zone, what do you see here? First of all, it pushed back up, give you this confirmation here, this candlestick confirmation here. I think sellers rejected this market till this point here. I get him. Then it dropped. I get him. Then once you see this pattern here, what happened? You come here and you set your order, your sell limit order. Then you put your stop loss at the top. Then you take this trade downward confidently, with confidence. This is with confidence because why? You know you are trading in line with the market trend. Now, when you see this candlestick pattern, because look here, the sellers dry this candle down here, showing that sellers are in this market. Now, if you see, we have caught a beautiful trade here. Why? Because you are trading in line with the market trend and also you are using a valid supply zone. Now, some of you be asking, okay, what makes a supply zone valid. Now, there are two things that makes a supply or demand zone valid. Is number one, when it's in line with the market direction. When it's in line with the market direction. That's one of the things that makes a supply zone or supply or demand zone very valid in the market. Now, the second let me give you an example first of all. Let me show you another example here again. If you look here again, after price came back here, again, now you see it came back again. It showed again that so it break of structure here, then it closed here. Now there's another supply zone here again. You see, there's another supply zone. Now the question is, some of you asking, why do you not take this supply zone here? Why do you not take this supply zone here? Since it's supply zone. Now there's another concept. I'm going to show you guys why I'm not trading. I'm not going to take this trade on this supply zone here, and rather I will go up further up to take it from this high here rather than that high. I'm going to break down in my subsequent video. So it's called inducement or liquidity. I'm going to break that down in my next or subsequent video. Now, if you look here, price came back here again. I saw this rejection here again. Now, if we need to confirm this rejection, one thing you can do is to go down to the lower time, let's say 15 minutes time frame here, to see that how that zone is playing out currently, to give you maybe a good confirmation or bias to take that trade confidently. Now, if you look here, price first of all tapped on it. This is the zone on the 15-minute time frame. First, price tapped on it. Then you saw this huge rejection. Showing you that sellers are completely in this market. Then it pushed back up again. Then also give us another bearish candle here, which is also a more confirmation that we should be selling this market because we've gotten our confirmation. Now you put your sell limit order here. Then you can put your stop loss above here. Then you sell confidently because you are moving in line with the vehicle of the market. You're moving in line when in the road or the direction the vehicle of the market is going to at that particular time. So guys, this is how you highlight and treat valid candlestick patterns. Number one, I said you should. One of the mistakes I said is do not trade candlestick. One of the mistakes that I make, I said in the beginning of this video, is that some traders trade candlestick that's not in line with the market trend, and also they don't trade it from a very good valid supply or demand zone or a support and resistance zone. So now the one of the mistakes you should not make is you should trade your candlestick. You should use candlestick as a means of confirmation in the market from a good supply and demand zone, and also let it be in line with the market direction. So this is the way to avoid unnecessary losses in the market. So guys, if you love this video, please like this video, share this video, and subscribe to my YouTube channel. And if you have any question or any topic you want me to make a video about, please drop them in the comment section. Ask me anything and suggest video ideas or titles you want me to make more, and I will make videos on that. And please subscribe, like this video, and share this video to other traders or people